Morning all. How are we all doing? Good morning, Ian, Amy, Kennedy, Mark, Steve, Joe, JC, Big Les. Good morning, almost midnight. Oof. Morning, Evil, Martin, Gregors, Pot DJ13, that's a new name. Morning, Baggy, Alan Bay, Virginia, Alex, F, Cyril, FTNet, Flav, F with no name. I don't know if that's a glitch or that's your name, but it's not there. Morning, Christian. How we doing? So we've had some news this morning. Aussie dollar. Before we get going, we better hit the button. Morning, Johannes. Alex, do I have a statistic over the last year? What better worked, long or short trades? No. Florian, to be updated. Morning, Senji. Morning, Adria. Morning, Themba. How we doing? Don't be a bum. Button hit, Dallas. Good man. Steve, morning. Do I have statistics over the last year? What worked better, long or short trades? No. No such thing. Trades that work the best are the ones that go into profit. The direction has nothing to do with it. Right. So, what's the time? 5 minutes to the open. So just a quick recap of the news and what we've got coming up today. We've had the rate 4.35. So that was as expected. We weren't expecting anything different, to be fair. So that's out of the way. We'll have a look at the press conference in a minute. We got construction PMIs this morning for the pound. Won't really do an awful lot. And the IVs. We've got Macklem speaking very late on today. I doubt very much there'll be much coming out of that, but we may find some movement in the Canadian dollar. You never know. He might drop something that we weren't expecting. And then tonight's main news from obviously the Aussie one is the unemployment rate comes out overnight just before the swap. So we'll get a lot of volatility potentially off of the New Zealand dollar. So that's today's news. There's nothing really that should affect the UK Open or the US Open from a news perspective. So it's just normal price action today until we get to New Zealand dollar later. This is basically the announcements from Australia. So the cash rate obviously came out 4.35, which is what we were expecting. Their forecasts moving forward, 4.3 for mid-2024, which is basically remaining as we are. 3.9 by the end of 2024. So the indication there is they're looking to drop roughly 0.5 to 0.75% this year. So a smaller drop than all of the other, most of the other countries are forecasting, but that's mainly because their rate is around about 1% lower than the other countries. So because they haven't had to go up quite as high, they won't have to come down quite as fast. However, their inflation is still way higher than everybody else's. So with the Aussies, it's a little bit a different situation because their inflation is still sitting up at 4.1. Same with the New Zealanders, 4.7. But they haven't had to put their rates as high to control it. So they've done a slightly better job than the rest of us, basically. So they're forecasting a drop this year. Board requires confidence in sustainable movement of inflation, same as everybody else. Inflation eases further in December quarter. Possibility of interest rate hike cannot be dismissed, which is what I said yesterday. They are known for just suddenly going, actually, we're going to change it off the cuff. So may still get one, but obviously their inflation is coming down really fast, so it's unlikely they will. Rate path depends on higher data from inflation. Yeah, prioritize bringing the inflation back to reasonable time frame. Same old stuff as everybody else says. Decrease further. Potential inflation backtracking. That's going to happen anyway. Bullock believes inflation must return to a certain range, but doesn't say what it is. Thanks for that. Inflation must be convincingly addressed before rate cuts. So exactly the same as everybody else, basically. All data driven. Blimey. Houthis are attacking US and British shipping. Good for them. don't think you'll get away with that. Anyway, so yeah, so that's pretty much it. So upshot of the Aussie is they're staying where they are, which is what we were expecting. My pen's disappeared. Their inflation is at 4.1%. They're expecting that to come down further, which it should do. They're a very, very high inflation change. That will bounce as everybody else's has. So basically exactly the same as everybody else. Data driven. We are going to drop our interest rates this year, although they're going to go half to 3/4 rather than 1 to 1.5. And it will be based on when we get closer to the inflation target of 2%, of which they are further away. So sideways, I would say, pretty much that. The same as everything else. It's just sideways. No interest whatsoever in long or shorts. We've had a big rally. We've got 28 seconds to go to the open. We had a big rally pre-market. Just as the markets opened, the electronic exchanges opened at 7 o'clock. We had a big rally this morning. So the pre-market ranges are actually there after that rally, but there was a big order came into the market just as the market opened today. So we'll see where we go. Very, very, very sideways there. I'm not sure we're going to get a trade on. Yeah, no trade on the DAX this morning. Pre-market. FTSE will be trading pre-market, but no pre-market on the DAX. It's too tight today. So we'll be taking the 5-minute ORB on the DAX, assuming we get some volume, obviously. And the FTSE, same. So yeah, they're continuing that rally. So we've gone long on the FTSE. TP1 is just above the previous day's high and just shy of last week's high. So that's not a bad area for an initial TP. And obviously, if we're going to hit 5R, we're going to need to break out that last week's high to get there. So we'll see where we go. Bit of volume coming into the open, which is good. We'll have a look at all the FX in a second. What do you recommend, SIH or ORB? Up to you, whichever one you fancy. They're the same strategy with different entry methods and different risk control methods. That thumb has been naughty. Please give it a spanking. Mine has been naughty. Morning, Astray. Morning, Franco. Thumbing in. Good man. Morning, Rico. John. Do you have statistics over the last year about which of your strategies has worked better? ADR reversals versus M5 H1? I can't remember. Can anybody remember? I went through it last year before I shut the VPS down. It was, I can't remember. I don't really care, RC, to be honest. It's irrelevant, isn't it? They all generated alpha, good alpha. So, yeah, they all made money. Which one, the question you're asking is, which one should I use? Yeah, the one that makes the most profit this year. Yeah, unless you have one of these, there is absolutely no way to determine which strategy you should be trading. Yeah, because I have absolutely no idea whether ADR is going to be better than H1M5 or hedging this year. Because I don't have a time machine and I can't see into the future. Therefore, I have no idea what price action will be. Therefore, I don't know whether I should be taking H1 RSI extensions or I should just be taking ADR reversals. So my advice, trade the whole lot, make buckets out of all of it. One of them might make a loss. I have no idea. You don't control the market. Which strategy worked best last year has got nothing to do with this year. I had a fantastic day on all these indices yesterday. Brilliant. Every single index made really good money yesterday. Today, they might all lose money because yesterday's got nothing to do with today. Yesterday was happened. Today is completely new price action. There's new players in the market. There's new conditions in the market. The market is going to break differently today than it did yesterday because it never does the same thing 2 days in a trot. Never does the same thing in 365 days. There is not one candlestick that you will see at the open that is the same as any candlestick you've ever traded in the last 12 years. Because every single day is different. So you cannot tell what's best. Just trade it. And manage the positions. That's all you can do. However, the best performing strategy last year was H1M5. Sorry, was H1 hedging. That produced just about 140% profit. This one, which has done 9.5% this month so far. What it's going to do this year, though, no idea. If I knew that, I wouldn't be sitting here. I'd be sitting on a beach because I just have an EA trading exactly what needs to be done every day, which would be lovely. Which brings me on to what somebody mentioned in the Telegram group today, who's never come into the live room, as far as I know, but basically wants to give his job up and be a trader full time. But not actually do any work. So basically, the upshot is I want to dump my job, become a trader full time, but I don't get this. And it seems like you need to do manual intervention to actually make money. What, you mean a job? Work. So you want to replace your job with another job, but you don't want to do a job in that job. Not going to make it, sorry. Completely the wrong attitude. And this is a job. Work. Go and look at the definition of work on Google. Yeah, it requires input to do it. Yeah, there is no such thing as just sitting here doing bugger all making money. If there was, I wouldn't be sitting here. I'd be sitting here. I wouldn't be sitting here. I'd be sitting somewhere else, doing something else, wouldn't I? If that was possible. TP1 on the FTSE. Oh, it's playing with it again. Look, I'm not having you. That candle goes bare for 1 second. I'm closing it. Too close to TP. Thinking about it. You went bare then. Close. Break even second portion. We are at yesterday's high. Sorry, previous day's high. Yeah. So there's a very good possibility of limit order triggers there, which will drive back from that level. So my TP's there. There's no point in risking it. It probably will break it because it's a lovely big, there you go, done it. Lovely big strong break this morning. So there you go. Just, wow. I mean, including spread, you probably still wouldn't even be triggered on that. But we'll see. You can see the limit orders are triggering here. Yeah. We're hitting a big batch of sell orders at the limits. So we may well undo that move. DAX this morning, no trades on the DAX today. So the pre-market range was too low. It was below 146. Post-market or the cash balance open is 324, which is way over 293, which is the 20% of ADR. So no trades taken on the DAX today. If you did take a pre-market today, if you're trading ORB, you would have taken the 15-minute pre. So you probably would have had 1.5, maybe 2R, probably more likely 1.5 out of that long. If you're trading SIH on that pre-market, you'll have been hedged on that, depending on what you took. But so we'll see where we go with the rest of those. I might do a video actually, because I get asked this question a lot about how you go full-time trading. So I might do a little video, kind of a checklist. I've covered it in here a couple of times in the past when we've been asked. So, but I might put together a video because it's this mentality of all these gurus with their Lamborghinis out there that, you know, that's why everybody thinks this is an easy job, because this 18-year-old kid's got a Lamborghini. So I might put together a checklist of what you actually need. So if you want to earn 60 grand a year, which the person in Telegram wants to earn, you're going to need to produce around about 5K a month. If you're producing 10% revenue increase a month, you're going to need a minimum 50K account. So first thing you need is 50K to trade with. Second thing you need is 3 months worth of wages in the bank. So you need 15 grand in the bank. So unless you've got 65 grand in the bank right now, you don't go professional. You can't. Knock that one on the head then. There goes my Lamborghini. But that's real, isn't it? I might do a video on that because it's a question I get asked a lot. And it annoys me because it doesn't, I mean, it's not that this person's annoyed me. It's just, it annoys me that people think it's possible to do that. just drop everything and go full-time as a trader. And I always use that analogy of the doctor and the surgeon. Yes, people go to medical university and stuff for 6 years to come out to become a doctor and earn 45 grand a year. Why do you think you can suddenly earn 60 grand a year without putting in 4 or 5 years worth of work? Not going to happen. Mental. Anyway, carrying on. Morning, it's time. Morning, Gav. Morning, Champagne. What were your totals on the indices yesterday? I don't know. I don't know. I'll run through them. So basically, DAX was, there's your break. So the DAX was a break up to, I only took 1.5 hour on the DAX yesterday, and then, tiny profit on the second portion. It was $160 in the morning. FTSE yesterday was out of the FTSE. So it's pulled straight back off those limit orders at the previous day's high, as I kind of thought it might. But it might still break through it, but you usually will get a drop. So out of that, $80. Yeah, so this one yesterday was clean break. So we had 2 clean breaks yesterday, basically. Clean break, 2R target, then out on the second one with 1R. NASDAQ yesterday was a hedge exit. So we got hedged on the NAS out at 5R, aggressive exit, closed. That was about $30. S&P yesterday was clean break. Straight down 2R, straight down to, I think there was 5R. So I took off that one at 4R, a couple of $100. And then the Dow was clean. It was super clean, like textbook clean yesterday on the Dow. So there's your break. Straight down to 2R, straight down to 5R, out. So 7R return yesterday on the Dow. So that was 250 odd, something, I don't know. Yeah, nice yesterday. Really nice. Easy peasy. So if you are, I mean, you're out, there's no way you got hedged on the FTSE. So if you're either still in the FTSE now or you're out, if you're still in it, obviously just watch, what the hell? So I can't operate a mouse today. Watch these highs. So that's the higher last week. That's obviously where the limit orders have triggered so far this morning at the previous day's high, which is that move back there. So looks like they're buying back out and they're going to try and rally today. So you're going to hit a brick wall there. We're either going to smash through that and off. We're pretty much at ADR already. So just bear that in mind. We've done ADR pretty much. Not on the pre-market though. The pre-market, we've only moved 36. So depending on obviously your chart, but it's obviously rallying hard. With the DAX, if you're hedged on the DAX, you've got a pretty similar situation today with the upside. We're going to be running into previous day's high on Thursday and that monthly high. So you got a double monthly coming up here as well. So this is a very, very strong resistance. We tapped straight into it and out. We've retested and failed. So we're struggling at the moment to get through there. So doesn't mean we're going to necessarily drop. Just, watch that level if you are hedged. If we break through it, you want to give it some room because, as you can see, we're going out into new territory. So we could just rally 150 ADR or so or more to the upside. Downside, really simple. Yesterday's low is just shy of ADR. So that would be my downside target if I was hedged on that one. Failing that, you're looking at coming back down to 125. Right. Well, that's indices done. Nice and easy today, which is good because I don't have to watch it all morning. Right, we'll have a look through the FX market and see what's going on today. So just catch up on the chat. I gave up, Brian. Yes. That was that was the person you were talking to as well, wasn't it? Some people you can't help. You just have to go, meh. Got to be cruel to be kind sometimes. So there's no debt of Forex health in UK. So there's no Department of Forex Health in the UK. Enroll and just get winning trades. Unbelievable. The fantasy dream world we live in. Yeah. Yeah. It's all driven by the... I watched that video yesterday. How I didn't realize how much money they're making. I thought it was all about courses, but it's not, is it? It's all about YouTube revenue as well. And courses. I mean, they're just making so much money. I'm in a DAX short at 0.2 ADR max range to 29.29. Hopefully that will drop. Morning, Harold. How do you initially select the pairs to run the EA on a specific strategy on the VPS, or do you just select all 28 pairs? It's up to you, Antonius. So if you want to run, there's two ways. So the bootcamp, in the bootcamp, I teach exposure. Which is covered in day 4, I think. Yeah. So day 4 basically talks about a lot about exposure. So the way that I used to do it is I used to use 0.25%, 0.2% risk on an initial entry. And when we got a setup, so the way I used to run it was I'd wait for, I'm on the ADR account. Let's go to the H1. That's because I've got my terminals around the wrong way. So I'd wait for a setup on RSI. When it got extended above RSI, then I would put the EA on the chart and let the EA basically get me into the trade. And then when I had full exposure on an instrument, that's it. So I've got 2 longs on the yen, which means no more touching the yen. So if a perfect yen setup comes along, can't take it because I'm exposed. The other way you can run it, which is the way that I run it now, is to trade all 28 pairs with reduced risk. So I'm now using 0.1% risk instead of 0.25% risk. Yeah. So I've dropped my risk by over 50%, but I'm trading up to 3 times as many pairs. So it's roughly the same risk profile. So I can get ever so slightly more exposed than if I was just using the 2 currency rule with 0.25, but I also get into more opportunities because obviously with each pair you've got a cross. So if you are exposed as I am for long on the euro, yeah, you could have the pound today collapse, and if the pound collapses today, euro pound is going to fly through the roof, which means I can close that out. But all of the other euro pairs that I'm in will just carry on going sideways because their cross, US dollar, CAD, Swiss, whatever, isn't moving. So what it allows you to do is get into positions where you've got more exposure on, but then also more opportunity. And I'm actually preferring, so I'd started trading this way last year, middle-ish last year, early last year, I think. And I actually prefer it. But the reason I started doing this was because I was running all 3 strategies on the VPS on every pair to test, which basically was a forward test of robustness as, you know, what if we trade all pairs? And what I was expecting was to blow the accounts or get into very high drawdown on them. What actually happened was, yes, it got into more drawdown because it had higher risk on it, but it was also banking a hell of a lot more money because obviously you had more positions on and more of those positions were coming to fruition. The downside is when you get a squeeze, you'll be squeezed ever so slightly harder than if you're following the 2 exposure rule from the bootcamp. So it's entirely up to you. There is no right or wrong. You know, this is a job. You have to do work. Telegram, man. On ADR reversal strategy, do you try to do aggressive drawdown control if price touches 225? Nope. Nope, don't close anything. No, it's a position trade. RCC, go and watch the bootcamp. It's a position trading strategy. Don't shut anything unless it's in drawdown, high drawdown. Just because something's got from 100 ADR to 225 ADR, what does that mean? The position that you took there is what? 125% deeper than it was before. Perfect opportunity to take your second position. And what's your risk when you get there? 0.25% in drawdown. Do you really want to shut a trade out because you're in 0.25% of drawdown? That's where I live. Normal. Totally normal. Have you seen the recent changes on the account E8 offer? Yeah. E8, right, these prop firms, yeah, just, if I was you, I am me, don't touch any of them with a barge pole. This is a house of cards. It's about to collapse. We've lost two now because the regulators are after them. Yeah. One of them's had their licenses pulled by MQL because they're doing something dodgy. The other one got caught doing something dodgy and the FCA were after them. Not the FCA, the Fed, basically everybody else, right? E8 have just changed, rebranded. What do you do when things go wrong? You rebrand. Yeah, what's E8 just done? Rebranded, right? Now they are E8 Markets. Why? Because they want to get more into providing demo trading for traders to practice on. Yeah, I can do that for free, E8. Thanks for that. So they are going more into, we need to look more regulated, more brokery, because otherwise we're going to get shut down. Every prop firm is panicking and crapping themselves. There is a massive case being built by the Fed behind the scenes somewhere, and I reckon they're going to come out one day and just go, you. It's going to be like a raid. Yeah, you know, like drug raids in the UK. The police go, we did a raid in Kent yesterday. We seized X billion out of 19 different houses. We've captured 24 drug dealers. They keep everything under the radar, then they go, boom. They get them. That's what I reckon is going on behind the scenes. Every single one of these prop firms is using demo data. They are manipulating, and they can do whatever they like with the charts. Yeah? What chance do you stand? It's all going to come down. So what E8 are doing, I got the email this morning about it. They are now, oh, there you go. We're rebranding. E8 funding. Trade, learn, earn. E8 Markets. Yeah, they're going to start providing education. One, to get you to press the button. Why? Because they're going to become a broker. What happens when you press a button with a broker? Spread, commission, swap. Thank you very much. We'll earn money from you there. Learn. We will sell you courses. Yeah. We'll teach you how to press the button so that you can pay us money. And then, if you're confident enough, we'll even fund you by giving you a demo account so that you can practice simulated trading. I can do that with my brokers for free. Thank you very much. But if you want to charge me, no problem. Yeah, completely restructuring themselves because they're about to get their chain yanked. FTMO pulled out of America. Why? The Fed. They're on them. They're after them. They're all going to come crashing down. Run a mile. Or run as fast as you can into it and take it while you can because they ain't going to be around for long. Exactly the same as binary options. They all got shut down because it was all a massive con. Anyway, yeah, I got the email about that. FTMO, yeah. Morning, Evans. Right, so let's do FX. H1M5 banked 0.35% yesterday. I posted this one in the Telegram group, Euro Pound. So this was originally an H1M5 mean reversion, which is just stuck in because this isn't going anywhere. So that was the initial entry back there. We went sideways basically for a couple of weeks. Second entry went in there. We then dropped down on news, went sideways for few days, sideways for a few days, dropped down on news. We've been going sideways now for another week. So basically, since the beginning of January, this entire move has been 113 pips, 3 ADR. But most of it sideways and obviously news. So this position here, I took off on the pop, and then it dropped, added the position back on, took it off again, dropped, added the position back off, on, took it off again yesterday. So I've basically banked 3 times already on this, which is just helping to pay for the swap because I've been holding it for 6 weeks because it's not moving. So if it drops, I will do the same. If it doesn't, happy days, we're going to get out. So just that's all I banked yesterday. ADR, the average is only an ADR away. You can see the TPs there. So if I can get back up to there today into that propulsion gap, I shall exit these last 3 positions and just take a break even on the rest of the position because that's paid me. So the thing's not moving, so I just want out because the trade's invalid now. So that's all I banked yesterday. So a bit of a slow month so far, but we are only on the 4th trading day of the month. So nothing else bankable at the moment. This US dollar yen is getting a little bit stuck as well, which we know about. So I've already banked on this last month as well and done drawdown control. We're back up at the monthly highs and weekly highs, sitting, hovering around up there. So there's no strength in this yen at the minute. Obviously, this move is off the back of last week's unemployment rate on Friday. So there's a good chance we're going to undo that, which just brings us again back into where we've been for the last month. Nothing's moving. So very difficult to make money on stuff that goes sideways. You just have to keep taking it off, taking it off, taking it off. Pound yen, same thing. So I've been in this one for ages, banked tons on it, done drawdown control on it. Again, it's a manual job. Fortunately, you have to do stuff. Still in it. ADR is just about 125 ADR is average on this, but that isn't going to be the out because there's so much swap on this now. By the time I get down to there, I need to actually get to about 175 ADR to break even. But I'm holding on for this yen. We are making new lower highs at the moment. So we just had a reversal alert long and a reverse alert short because we're just moving sideways. So yeah, just waiting for some yen, really. But yeah, you can see what I've got on. There's nothing particularly worrying. There's nothing actually getting into profit at the minute, so not a lot we can do. RSIs are flat. There's no 4s, no hourlies. There wasn't a lot at all yesterday, so we're just waiting for stuff to happen on the H1M5 side of things. ADR reversals, there are none so far today. Quite surprised we didn't get any ADRs on the Aussie pairs. We've had obviously movement off of the Aussie off the back of the news, but not a great amount. 3/4 of an ADR really across the board. That's all we got so far today. I think we'll probably get some more continued strength on it maybe. So we might get some ADR hits on the Aussies today. But that news is not bullish. It's not bearish. Everything they've come out and said in the press conference is just delay, exactly the same way as the US have delayed. The pound are delaying. Lagarde hasn't come out and said it yet, but pretty sure they're going to do the same thing. So we're just moving those interest rate drops back a little bit because inflation's not quite coming down as fast as we want. So there's nothing really to make this massively bullish or bearish off the move. So if you do get ADRs, there's a good chance they might play out nicely. But there's nothing there. There's nothing on the weeklies. Obviously, nothing's hit monthlies because it's the beginning of the month. So there's nothing to look at on ADRs either. We're just waiting for setups. Yesterday banked. What did I bank yesterday? New Zealand dollar CAD. That was it. Yeah. So New Zealand dollar CAD banked yesterday. So that was the ADR hit from Friday. Got out. Target was bottom of that propulsion gap. So out at target. Yeah. Nice, easy ADR reversal. Textbook. So just sitting in 2.5%, banked 3.47 this month. Waiting. Aussie dollar CAD might hit today. if we get more strength on that Aussie dollar and we can get up to ADR, might just move the target down slightly on that one. Just bring it down within ADR. See if we can get that hit. Hedge yen. Come out propulsion. I don't really have much problem holding shorts against the yen at the minute. So got a bit of profit to bank on US CAD and Euro US. So 2 positions on this one. I'm going to go for the propulsion gap at ADR. Highly unlikely we'll hit that today because we've got no news catalysts. But I want to see if we can retest this unemployment rate number. We need a little bit of weakness in that US. And the other one, Aussie US as well. Same thing. And US dollar CAD. So average almost hit on that one. Top position on that. I'm just going to target ADR now. Or do we go for the propulsion? I'm going to go for the propulsion gap today. Just because we've got Macklem speaking at 5:30. So I don't think we'll get much out of him, but that is happening at 5:45 this afternoon. So if there is a spike and a rally in the Canadian dollar off the back of something said, we may get an ADR hit, in which case then look for a test of that level. Potentially, I mean, that's quite a small break, but there is a small propulsion gap there as well, which is basically that level. So this is why we get propulsion gaps. It's the volume of orders needed to break new levels. So we've got a high hit. We hit the high again. We accumulated at that level, and then we broke through it. So that's the propulsion move. But I'd be more inclined if they're going to drop or rally the CAD to probably go for that. But I'll watch that later. No, I won't. I won't be here. I'll be in a class. But anyway, I'll set TPs there. If it gets hit, brilliant. If it doesn't, hopefully we'll be in profit. So apart from that, there's nothing else much to bank on ADR reversals today. Hedging banked 1.36% yesterday, 9.5% so far in the month, 0.5% banked today. What did I bank yesterday? Fifth. So we banked Euro US yesterday. Well, I banked Euro US yesterday. So got out of that short. I covered this one in the live room yesterday as well. I can't remember why I put the TP there, but I did. I've no idea. I think it was just because there was only one position on it, and I was worried about it pulling back, so I just wanted to take money because I was expecting a pullback. We didn't get it. So anyway, just bank that. Swift, no idea why. There is no logic. It's just take the money when it's there. So pound Swiss banked the long yesterday. Up there, basically that was that area there, and then we got in short. We had a reversal yesterday, so that's taken a short. So I am short, and I need to set a TP on the short. That'll do. So just targeting basically that low, that there, and obviously if it rallies up, I'll add into that one. So out of that pound Swiss, US dollar Swiss out of yesterday as well. That was 2 positions, I think. Oh no, that was the single as well. Sorry. So that was that entry there. There was a H1 reversal alert there. Got out of that. Basically just gone sideways. 1, 2, 3, 4, 5, 6, 7 days. Just wanted out. Held it for 7 days. So take the money. US dollar yen. That was the same. So this was the reason I took this one off yesterday was because it's a terrible reversal alert. Look. So that's obviously the reverse alert, but didn't get in until there. So missed all of that, basically, which is almost an ADR of movement before we got the entry on. So it was extended to the upside. So I just got out basically up at the monthly high, or monthly low in this case, I think it is. Oh, no, it is a monthly high. So yeah, this is last month's high. So just taking it off in case we get a limit trigger. And I'm expecting them to come back down and undo this US dollar move. So I just wanted out of it. And I don't really want to have longs against the yen because they are going to change that rate at some point and that is going to fly down. So I'd rather be short than long. And this morning closed out the pound odd. So there was a reversal alert there. There's the entry. So that is the actual reversal alert. Obviously you can see the spread, because it's an Australian pair, New Zealand pair, big spread. So that was the entry. Positive slippage, it's unusual. And out. So I just took that one off this morning for no other reason than it was 0.4%. It's money, take it. And I'm not convinced about this Australian either. There's no strength or weakness off the news. So just putting it in the bank. Not much else to bank at all at the moment. Aussie dollar Swiss is getting close to wanting to have a look at. Target's all the way up there. I'll keep an eye on that one. If that's sitting in sort of 0.3, 0.4 or something later on today, if we're up towards ADR, actually, I might as well move it there. Yeah, that's 0.4% ADR. So if we can get there, I'll take that one off and bank 0.8 for the day. But I'm not expecting a lot of movement today because there's not really any news catalysts until this evening's New Zealand dollar. So and then tomorrow is a dead day as well. So really the week doesn't kick off for any news until Thursday, Friday, unless we have these clowns moving the US dollar. So yesterday we had a talking head come out. Mester's speaking later. Mester is one of the ones actually that the market does pay attention to. But we had one of them come out yesterday after what Powell said last week about moving the interest rate drop from March to May as an almost certain. We had one guy come out yesterday saying, actually, I don't think there's a problem with dropping it in March, but we might even put the rates up. Like, Christ, make your mind up. It's like being in a company, yeah, board of directors all sitting there. If the managing director comes out and says something, you would expect the rest of the board to say the same thing. Nah, not in the Fed. One of them comes out and says that. The other one comes out and says that. Literally 2 days later. This is why you can't rely on any talking head. If you get a massive spike like that on a talking head, it'll be undone in 24 hours because the market will go, hang on, that's not what they said. When they look, because what happens is they just react. They just go, he's just said they're going to put interest rates down in March. Hang on. No, that's not what Powell said last week. That's why we get that. This is why the A-shape and V-shape recovery exists. Yeah. Hey, quick, look. Oh, no, don't worry about it. Look, the unemployment. Oh, no, don't worry about it. Knee-jerk reaction. Market's jittery. It's scared shitless of any movement. So it's a load of rubbish when you get a talking head move in the market. They've all moved to Dubai. Who? Oh, the prop firms? Quite possibly. No tax. Franco, I lifted my finger and placed 6 trades, different pairs, after 18 hours, no movement. Bogus. Closed all, turned on a movie. Yep. That's what it's like at the moment. Seems like the markets have become numb to daily war news. Yeah. The trouble with daily war news at the moment is there is just so much of it. And at the moment, none of it's affecting us in the West significantly enough to warrant any movement in the markets. But that could easily change. Like the Houthi rebels are probably, I think, one of the biggest dangers at the moment. Although they are very small, they are blatantly just attacking Western shipping, and they're backed by Iran. So Iran, if they don't sort it out themselves, will have the US sorting it out for them. That could escalate into another Middle Eastern conflict like the Iraq-Iran wars, in which case then that is going to affect the markets. So the stock market will drop. Swiss franc, yen, US dollar will get pumped. The same thing as always happens. But just got to keep your eyes on it. That's why I was looking at the news this morning. That's the thing that caught my eye. The Houthis. Yeah, because this is where it is, I think, at the moment. This is the flashpoint, I think, at the minute. But what seems to me to be the case now is we've got, obviously, NATO and allies everywhere, yet there doesn't seem to be any willingness from any Western allies to help anybody much at the minute, because we just don't want to get involved in it. There's, no one really is agreeing with what's going on in Israel but at the same time, as soon as you get involved, everything could trigger World War III at the minute, couldn't it? Everything. Russia is got more nukes than everybody on the planet. Don't want to upset them. Yeah, sorry, Ukraine, but that guy's got big guns. I know we got big guns as well, but he's got bigger ones. Yeah, it's just, that's the way it feels at the moment. No one's willing to do anything about anything. You sort your own problems out. That's the new default, isn't it? We're just coming out the back of a pandemic. No one's got any money either. In the UK specifically, we've got no money. We've got no military. What are we going to do about it? Not a lot. They scale. There's an article on the news the other day. In the UK, we scale our military forces based on what the threat ratio is. So they have a threat analysis done every year as to what the threat of requiring troops is. I never understand that, because you need your troops when something kicks off. They don't give you a warning. It's like, right, we're going to start World War III in 18 months. If you could just get yourself ready. No, it just kicks off. Our readiness at the moment is down here. So if it does kick off, we're not ready. They'll suddenly go, oh, the threat's higher. Let's start building the troops. Anyone want to come join the army? No, thanks. That's what's going to happen, isn't it? Anyway, doesn't affect me. I'm too old. Thankfully. 94 watching, 49 likes, 91 watching. Let's check the likes out. That's a good number. Half of you like me. 52. That's even more than half of you like me. That's brilliant. What's wrong with the rest of you? Why don't you like me? What have I done wrong? Powell hitting the source with John. Just a little too much. Yeah. This is why. 3 o'clock somewhere. Ah, look. He looks like the Grinch there, doesn't he? Bless him. I like you. Oh, that's nice. Thanks, Gav. I don't know you, so I can't say if I like you or not. I don't dislike you. There you go. It's the best I can do. Right, so there's no news today. Just keep your eyes peeled on, obviously, financial juice, see if anything kicks off. But indices are done and collapsed. So nice example of the ORB strategy working, regardless of whether or not the market decides to continue the rally. So that level there, obviously, that we identified, the weekly high, previous day's high, limit order triggers, certainly kicked in this morning, didn't they? So DAX melting out of bed today. So if you are in a DAX today and you have got a hedge on, watch this level here, which is yesterday's low, and it's a double bottom yesterday's low. So we know there's a strong element of buyers in there, although that is pre-market data. So not convinced, but that is basically where we should be looking for potential downside targets. We've got the previous day's low, which is, I mean, if you actually look at the previous day's low and actually where we opened yesterday and drove into, they did hold that level. So there is good potential for buys there. Failing that, you've got that level there. So watch those two levels for potential exits. That's the preferable one, because by the time it gets there, the market will be more exhausted and less likely to continue. Therefore, you're more likely to get a pullback. If there's some reason we're going to collapse, you're looking at 125 ADR. Upside obviously is previous months. Other than that, there is very little else happening in the FX markets at the moment. So just in stuff as usual, waiting to bank, which is life. Sitting waiting. I'm going to work on the so this morning. Nice quick live room this morning. I'm going to get some work done today. So this morning I am going to be testing. I'm spending the entire morning in the strategy tester, testing all functionality of my new position trading EA so far to death. So I'm hoping today to have all the bulk of the back testing done. And then obviously I'll have a list of bugs to fix. And then once those are fixed, I shall move into forward testing, hopefully by the end of this week. So I'll get a VPS up with the new position trading EA on and a new account, basically to play with, just to press buttons in and make sure everything does what I'm expecting it to do. So hopefully that will be the morning, assuming nothing else happens. But anybody got any other pairs they want to look at or anything this morning? Because I haven't really got anything else to discuss this morning. Aussie dollar, US dollar. You can look at that. So we're just coming out of the, I don't even know what that was. That's probably an FOMC or something. What date was that? 10th of November. So we're just basically retesting at the moment the propulsion move from previous, which they've brought back up again. This is a tricky one because you're sitting bang in the middle of two massive propulsion moves, look. So this obviously move, this is quite an old move, but this is where we rallied the market from. So they've obviously tapped that, retested and pumped it. We are obviously off the back of the unemployment rate on the US from Friday. So you are stuck between a huge batch of sellers and a huge batch of buyers. One of them is going to fail, obviously. Otherwise, we're going to sit in a range like that for the rest of the year. So, yeah, one or the other. We're just coming out the back of 2 weeks of absolute nothing. So it's difficult. I still am. I've no idea if this US move is legitimate or not. It doesn't seem. It seems too big a move to me off the back of unemployment. Too big a bullish move for this to get a sustained rally on the US dollar. But they may well do. So right now, though, it's bang in the middle of nowhere. There's no signals. There's no ADRs. There's nothing to do. Wait. Sit there and do nothing at the minute. Looking at S&P flip a coin trade. Not very hip to indices, still learning. We'll trade them in the afternoon, Franco. We'll trade them at the open. Don't trade the don't trade the US indices in the Globex session. It's terrible price action. Unless you're doing a longer term trade, obviously, then yeah, flip a coin. Pan New Zealand. Gav, I was looking to purchase some of your EAs this weekend once I finish the bootcamp. Shall I hold off? No, well, it's up to you. When you finish the bootcamp, you'll realize it really doesn't matter what you use. So I would just use the market. I've been using market reverse alerts EA for years. And I'm using it today. I'm not going to stop using the market reverse alerts EA. That is still going to be used. Nothing wrong with it. All I'm doing is I'm bringing out a new EA. I'm developing a new EA basically to simplify, just simplify it. All this new EA is going to do is what I do without all the complicated crap that's in the market reverse alerts EA. So it's a scaled back version. It's still complex in what it does, but it's much, much, much scaled back. And it's got a manual trading facility, which is missing from the market reversal alerts EA. So I would just do what you want. Do the bootcamp first. Don't do anything until you might find that you want to manually trade. You don't need the EA. You don't need any of my products to trade the way that I teach. You can trade the way that I teach with pure price action. If you see a bullish engulfing on a naked chart, go long. Yeah. If that trade works, take it. If it doesn't work, scale into the move. You don't need anything to position trade. It's a methodology. It's a way of trading. However, there's better ways to do it and worse ways to do it. But at the end of the day, I have no idea whether any signal will ever work because I haven't got that crystal ball. I can't see into the future. So, but market reversal alert CA is not going anywhere. I'm still using that every day. I will be. Pound CAD, pound New Zealand I was looking at, wasn't I? Yeah, stuck out of the pound New Zealand last week. Again, sideways, really. We've got New Zealand. What's this at the moment? Is this New Zealand strength or pound? New Zealand weakness or pound strength? Pound strength. So the pound's rallying at the minute. Got a nice push going on with the pound. So New Zealand dollar has their rates this evening. Unemployment rate, 4.3. So we are expecting quite a big increase in unemployment. Whenever you get this kind of forecast, it's very easy for the market to miss it with a positive number. So we've got a deviation here of 0.4% to work with. Anything that comes out lower than 0.3 is going to be a positive for the New Zealand dollar. So there's a much higher probability of a green number and the market reacting in a positive way to it this evening. So you would expect New Zealand dollar strength, which means that will be down later. So we've just had the reversal alert, M pattern reversal and retest. Oh, look, there's a Batman, everybody. Let's go down to the 15-minute chart and look at the Batman. The Batman. Sorry, that was really crap, wasn't it? Anyway, it's just another version of an M pattern reversal, basically. Continuation in structure. So short. I'm not in it at the moment because there hasn't been any extensions. The last entries I had, as you can see, were back here and exited there. So it's sideways at the minute. But that reversal, if we get lower than 4.3 on the unemployment rate, there's a good chance that we might come back down. But we've got a strong propulsion move out of that accumulation. And we've got a range break there, which held nicely as well. So there's two big propulsion gaps to the downside, which we know are full of buyers, and the market's not going anywhere. But you are just taking a bounce out of this triple top high as well. So, this is very difficult to call anything on that one at the minute. We're in the middle of a range. Look, when you look at it like that, you kind of in the middle of a range, aren't you? So never trade from the middle of a range, trade from the extremes. Don't know. Pound CAD. I've got one long on the pound CAD at the moment from back here. And we basically didn't do anything. We went into an expanding range, which is a nasty thing because it means there's volatility and volume coming into the market, which tends to start a big move off. So but at the moment, that propulsion gap's held and they're looking to buy it back out again. So I'm long at the moment on it, but it hasn't gone anywhere since I got in, which was last week back here somewhere. Just sideways 3 days, one drop, push back up. So either that retest is going to hold. So you got a high, low, lower high, lower low. We're going to hold that retest and probably come out of here. Or we're going to get that reversal alert there. It's another Batman. Potentially. It's an upside down one. And come up into that propulsion. That's where my target is on the long. That extension there. But we didn't get, this is the thing with the RSI. The RSI shows the relative strength. After a strong move comes a profit take or not. Yeah, we never know if there's going to be a new leg or if they're going to take profit on the move. Yeah, it depends on the market conditions, the positioning, the banks, whether someone comes in with the big orders, so much stuff that can move the market. But we either get the pullback or, in this case, we get the reset. So now there is potential to come back and do another one, which means that we'd need to scale in down to 225 ADR, down to these lows. And we take profit on that entire leg. We'll have to wait and see on that one. And that's also an ADR reversal, I think, wasn't it? Oh, no. There was an ADR there, but didn't get an entry. That wasn't. So, no, there wasn't an ADR on it. Pound PMI in 45 minutes. Construction, yeah. It doesn't do a lot. This is why it's orange. Construction PMIs. It can do. But it's not it's not something that the market tends to react to. Basically, it's like, how much are building materials? Doesn't really affect an awful lot, apart from potentially the cost of buying houses, but it doesn't really have an impact on inflation or interest rates or GDP. If you're looking for someone to help test it, just shout. Nope. When is the EA implants coming out by AI? Never. I saw something on the news, I think it was yesterday or maybe it was this morning, about AI, and they were interviewing different age ranges. And of all the people they interviewed, it was like 70% of people were excited about AI and what AI can do for the human race and all this sort of stuff. And then they did the same thing with the same age ranges, saying, are you worried about it? So the first question was, are you excited? And everyone was like, yeah. And then it was, are you worried? Like 65% of people were worried about AI. So yes, we're excited, but we've watched Terminator. So yeah, for anything to do with trading, you've watched Terminator, right? Do you want that loose on your account with your money? Probably not. So there will be no implants for AI. If GU-EU doesn't come to H4 propulsion gap, what could be the other scenario? H4? What, coming back up into here? I mean, that's the obvious support resistance. And then you got that level there, which is that propulsion. So it could come down to there. Could bounce off of here. That's a very strong move, look. Yeah, so they're already extended. We've done 250. So we've done 2.5 ADR since we started that move with the US on Friday, which there's been no pullback, no profit take whatsoever on it. So we're either going to do a flag break, short, in which case we're going to run straight into that double bottom resistance, Yeah. Or we're going to slam through that, in which case then we just need to be looking at where they're going next, which will be down into that propulsion move where we basically broke and tested and rebought from. So there's buyers there, we know. And if we get all the way down to there without having pulled back, you're looking at somewhere in the region of 3.5 ADR with no profit take move. Yeah. It's highly unlikely you're going to get much further before you have to do that. In which case then you'll be targeting this propulsion gap. So I'm in there. If I have to get in there and there, my average will be here. The propulsion gap will be the exit. Euro US dollar's already done exactly that scenario I just said. Look, we're starting to bounce off of that previous support resistance. So either that is going to fail, and then we're looking, I mean, this is a bit more tricky, this one. That's the obvious level, which is the middle of this propulsion gap. So roughly an ADR for second position. In fact, that's going to be too close for me, I think. What do I need? 60. Yeah, I could get a second on there. So somewhere around here, 125 ADR, second entry, and then get out on a push up, probably to retest that low. Don't know. It's first position, so it's very early to be worrying about backup plans on the first position. I mean, at the moment it's in profit. I can just shut it and walk away. It's not even in drawdown. But don't know. We'll have to wait and see. Morning, Matt. You're late. Right. I'm going now. You've arrived. So I'll be back this afternoon, 2:20 for the New York session. So there's nothing to worry about really today. I mean, we may get some really crazy movement off of some of these PMIs, but unlikely. But Mester's probably the thing that you've got to worry about most today before we get to this evening. So there's no news catalyst today to drive the market anywhere. So unless anything comes up here that's exciting, we're probably not going to do an awful lot. That euro's just dropping. Let's just quickly see what they said. Yeah. Confident ECB is confident that the inflation is heading back to target. Their forecast is 3.2. That's up. I don't know. Might get some movement off that. The market seems to be upset a little bit by that news. Or is that US dollar strength coming through? Oh, that's just US dollar strength. Sorry. Forget that. It's just the US dollar rallying. Right, yeah. So I'll be back this afternoon, 2:20. For New York, back tomorrow morning, 7:50, same time for Frankfurt. We'll see how we get on with this afternoon's indices. Yeah, and we'll see if anything moves today. Anything I close out or anything that moves, I will pop in the Telegram group. I'll just be monitoring all this morning, but I'm not holding out much hope for a huge amount of movement today. So back this afternoon. Trading while wearing AR VR glasses. I can see it now, screaming and yelling, arms flailing while sitting in the coffee shop. Yeah. No. I don't think so. If you're sitting in a coffee shop wearing virtual reality glasses, you're probably doing something else. I doubt they'll be trading. Anyway, might be. Right, I'll be back this afternoon. Anything you need, I'll be in Telegram. Other than that, I will see you guys next time. Have a good one.